Hello everyone and welcome once again to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked stock market timers. And while I bring my 30 plus years of trading experience to the report, we've been set up our short-term trading service for our subscribers. Daily reports, you can see our day trading service past 3 years record there. And you can see there I average over 700 trades a year. So if you don't want to sit in front of your computer all day like I do, you can contact Striker Securities and they will auto-trade Woodson Wave Report signals. So while we've been trading for the last 30 years, we're relatively new to the YouTube channel. So we appreciate if you can hit that subscribe button, the reminder bell, and the like button. We appreciate your support of our channel. So we're going to look at the S&P. We'll look a little bit at gold and Tesla. Here we have a weekly chart of the S&P. As you can see, this is the expanding triangle we've drawn out for wave 4, which began at the January 2018 high and ended at the March 2020 lows. And that blue line you see there is an extension drawn all the way back from the 2009 lows. And you can see there's a 2009 lows. That trend line hugged up against there. It's been a very good resistance level for over 10 years, 12, 13 years, whatever it is. Maybe it's 11 years. Okay. And then you can see we breached above it there with the most recent highs in September and a test and rejection since then. So that's the big picture. So we're looking for a wave 5 up and the first wave here from those March lows. And we get back to the September high, most recent high. Our preferred count here is an ABC correction where we've seen wave A down to the September 24th low, wave B up to the October 12th high, and we're looking for a wave C down. Wave C will gain equality with wave A at 3174 and a Fibonacci 1.618 multiple at 2942. We have some a key Fibonacci turn date coming up. We'll get into that here shortly. But we can look at, I think we can look at from the October 12th high, or we can look again from the September 24th low. We have wave 1 up, wave 2 down, 3 subdivides, 1, 2, 3, 4, 5 into the October 12th high. It appears that we have a fourth wave triangle complete here. As you can see, I have it labeled A, B, C, D, E. And this blue line here is the make or break level. Okay, that's the difference between the preferred count, which is looking for a flat correction, and this count, which is the top alternate count, which says we have 1, 2, 3, and then 4 down, and we're looking for a 5 up. The preferred count would need a move below this first wave high, which is 33.97. If that is broken, then this won't go up to a 5. If it holds, then we look for this low to hold and this to move up to wave 5, which let's get a target price for that for you guys. While we're on it here, let's get an extension. We can go from wave 1 here to the wave 4 low. Should be a little bit above 3600. Yeah, we got 3603 there. So if this holds, and we'll watch this develop and update it as we go along this week, we might expect a move up to 3603. The first sign will be a move above this wave D of 4 of the triangle high of 3476, and the second signal or clue will be a move above the B wave high at 3515. Then it'll just be a matter of time before the wave 3 high is taken out and we move up to the 3603 level. I want to recap here really quickly, if I can, with the preferred count and the alternate count. Here is the alternate count with this make or break 33.97 high And if you draw this line all the way back, you'll see it goes back to the old highs on February at 33.93. That's a very key resistance level. So far, they've managed to hold it up above there. But I really believe if they give up 33.97, it's a trap door and this thing will just collapse. And by a collapse, what we could get is that, get back to our charts here, get to this move down to 31.74. And if we look at our time spiral, that would be a long way in a short time. Let me pull that up for you guys, and that should be here on this preferred count, where we have an A down, a B up, and a C down. And this market has turned on our Fibonacci time spiral dates with a slippage of 1 day, except for this 10-12 high. You can see here, there's the 924 high. Fibonacci 8 days later points to September 10. Market bottomed 1 day later on September 11th. And then the next one pointed to September 15. We had a slippage of plus 1 day, which marked the B wave up here on September 16. The next day in the sequence pointed to September 23. And again, 1 day later, we have a low of wave C of A and wave A 1 day later at 924. The next sequence pointed to October 6th, and the market topped on October 12th, which is a Fibonacci 4 days later. So if this sequence is to keep identifying alternating highs and lows, where it pointed to a low, then a high, then a low, then a high, then we might expect a low on or near October 27th, which is Tuesday of this week. To think that it would go down here that fast might be a little hard to believe, but we'll see. You never know what can happen. Again, the key level is 31.97. That holds. It's not going to happen. We're going to see wave 5 up to those highs over 3,600, just above 3,600. Okay, let's look at the gold market. As you can see, we're still looking for that 4 to either finish or give way to 5. It's been a long sideways correction. You can see we have our Fibonacci targets here. It has reached that 50% retracement target. It has not yet reached the 618 at 1825. The make or break level for that would be the wave 1 high. I think we have that off a little bit here. Let's move that over here. There we go. Which is the May 18th high of 1765. So as you know, wave 4 cannot violate the price territory of wave 1. So we've already achieved the 500 a couple times. Allow for a move down to 1825. And the make or break, again, is the 1765 high. So we look for this 4. 4s can be long and sideways, and this one is. It's still playing out, so we'll have to look for that breakout to the upside or a test down to the 618 retracement level. We haven't talked about Tesla in a while. This is a little longer term going back. You can see here a clear 5-wave pattern to the upside. Let me just put our little Fibonacci extensions on there so we can see if we started roughly here, and there's our 1, there's our 2. You can see 3 reached a little bit more than a 1.6 extension of wave 1. Let me take that down and look at our 5th wave as compared to the first wave. And here is our bottom here, and there is 1, and there is 4. And you can see that reached a perfect 1.618 multiple at the high just above 500. So, I'm sorry, 400. 405. So, we are looking for a correction of this 5-wave advance. So if we get our Fibonacci retracement levels on there, sorry, that was 500. My apologies. That was a 502, 504 for the high there in Tesla, the all-time high. So if we are going to see Tesla correct this 5-wave advance, 1, 2, 3, 4, 5. A Fibonacci 382 puts us at 328 for a target. A 50% retracement, which would be within that previous fourth wave right in here. This would be a perfect area for Tesla to correct to. That is 273, and a 618 will take it down to 219. What's interesting is what's going on over here. By the way, this is the appearance of a triangle. Let me put that up here with a flat top, pretty much there, and then an ascending bottom, which would make it an ascending triangle right there. You could call this A, B, C, A down, B up, C down, D up, and E down. So if that's the case, what we would see then, and let me mark this off for everyone here, what we would see instead of a 1, 2, 3, 4, and a 5, and let me do a little settings on this here. Let's put the lines in for everyone to see. Or is it not going to come up? Okay, well instead of that, let's wipe that out and remove it. We could see the third wave extending. So this would be 1 and 2, and this, although it doesn't look likely, 1, 2, 3, 4, that would be, if this is a triangle, that would have to be a 3-wave high. We'll see how this plays out. So far that resistance level is holding, but if we look at it from this high here, October 14, is it? October 14. This is a daily. Let's get into, we got a little 5-minute chart here. You can see the October 14 high, and we have a 1 down, a 2 up, a 3 down, a 4 up, and a 5 down. So it should be correcting from there. So that could indicate a change, excuse me, a change of trend to the downside in Tesla. Let's get our Fibonacci retracement levels up here from that high. And you can see we are looking at, again, the area of the previous fourth wave is in here. So we're looking at a move up 430. 50% retracement gives us 436.89, and a 618 takes us almost right to the previous fourth wave high of 443. So what's really interesting is looking at from this October 14 high, it looks like we have a clear 5 waves to the downside. We can look for a 3-wave correction up and see if it's followed down by 5 waves to the downside. If it is, then we might expect these targets to be achieved and this triangle to not be a triangle, just the first move down and a wave 2 up. So we'd have a 1 and an A, B, C, 2. We'll mark that for you guys here. Okay, let me get that in. And that would be, we'll make that a little bigger. That would be a 1 there, and then an A, B, C for a 2. Pretty much a flat, and then we'd see a 3 down. So let's see what that gives us for a target here. Let's get into our Fibonacci extension, and we're looking at 1 down. We labeled that wrong too. 2 up, and then a 3 down would take us in here. Let me get that extension to work a little bit. Let's try that again. We would look at, let me erase that. It's not a 2 and remove. My apologies. That would be a 1 down. There's our extension tool. That would be a 1 down, and that would be a 2 up right there. So yeah, we're looking at the equality right in there in the previous fourth wave of a lesser degree. C equals A at 295 and a 1.618 at 188. Again, ideally it corrects in this area here between 328 and 273, and our 295 target where C equals A rests comfortably right in between, and you can see that would be a good area for it to correct. So we'll see how everything plays out. We'll see how that October 27th turn date works out in the market, if it marks anything or not. It should be an interesting week. Markets in between. Either it's going up or down depending on these make or break levels. We need to see a break here of the S&P D and B waves high within that fourth wave for a move up to above 3,600. Otherwise, we need to see a move below 31.97, and then there's a bear trapdoor waiting just beyond there. Have a great week, everyone. We'll talk to you during the week. Until next time, take care.